Alrighty, what's going on, guys? We're going to be going over a market overview and just a little market scan here for us. I'm kind of doing this on the fly, so please bear with me here. But as you guys can see, we kind of bled beneath the previous all-time high, resistance turning support, potentially, right? And then you go into the hourly and you start looking at this and you go, oh my gosh, we bled, we retested, we bled. Um, Kind of what we were doing was putting in a lower high off the previous day high or like a support over here, support resistance test, whatever. It's just a quick little breakdown, and then we kind of sold our way off. And then from there, the end of month candle closure brought a really volatile move back to the upside. So that is going to be something that I would be looking at in terms of indices. I would be looking at probably nothing. I haven't really been trading a lot of indices right now, and it's the same general look over here with QQQ. And they're just heavy volume hammer candles, right? So typically with these kind of candles, what I do is I wait for a little bit of time to play out and just kind of see where the direction is coming from. In terms of like after this print leading into the new week, I always like to look for that kind of stuff. So I typically will just mark out the low, mark out the previous day high, and then from there, I'll take rid of this. We'll go into the hourly real quick. You'll be able to see some of the hourly levels, right? And then that's basically it, guys. So yeah, there isn't really a lot of interest for indices for me personally, but yeah, it's kind of just what we're looking at with QQQ and SPY. There's really not much to it. Um, okay, next. So let's go over to Apple. I want to talk about Apple. Alrighty, so Apple's at a spot where it didn't necessarily see a crazy move in Friday. It kind of just chopped around at this resistance and then got the strong follow through at the close. But what I like about this Apple chart is, first of all, this was a previous markdown, and then we got a double top, and then we got a lower high. What are we looking for now? Well, where is all of the progression from a chart being based off of? It's being based off of these heavy gaps, these heavy gap downs, um, and these little gaps that are also kind of respecting that as well. But the larger perspective of this is coming off of like this gap and this gap, right? So whenever you're pushing back to the tops of these gaps and you're pushing back into a resistance and you find that sell with a strong seller spread behind it, and then you're finding weaker kind of buying chop in between that, what you would be typically looking for is some sort of flat top resistance, break, base, and maybe a go. I'm probably not going to be trading this scenario. What I would be looking for is a sweep of like this external and then a push, a failure, a lower high. I'll probably short this thing back down into here. Right, so this is going to be a focus of mine just because of the hourly look, where this was also kind of playing in with that, tying in with that market micro distribution that I was talking about last week. If you guys didn't know what I meant, it was this major flat top resistance spot after a very large sell on SPY itself. And what this was doing was kind of, you know, catching a lot of late bulls to the late run, to the late new all-time high, breakout trade, and then from there, that's whenever they start liquidating. Bulls are kind of caught offsides and they start potentially bailing on their new positions. And then from there, you'll start seeing that pressure and that tension from the buy side release or be absorbed from any sort of seller activity, any sort of heavy ask that remains within the confines of this of this 530 range that has been being defended for how many days on end. And then you're going to get the sell. We got the sell, however, that sell did fail. I don't necessarily know where the resemblance of this low of day is on the chart, and sometimes that just happens. I think this was just one of them end of day squeezes with the end of month flows coming back into play, and yeah, it just wasn't anything. It was a little bit random of a spot in which we kind of found that low a day from, right? And that's fine. Indices wasn't even a part of my focus, so I'm not too worried about that. But that's kind of how Apple caught this green day. However, it is just a very ever so slightly 0.5% move net return for the underlying on Friday. And we're still trading within the confines of where the previous micro distribution happened with no super strong daily print, right? So if you want to pull up your moving averages, you could do so. You could always take a look at where they're at just for confluence. I could take a look at the previous day low, how that's kind of tying in with that 9 EMA, and then we have the 21 ever so slightly beneath 187 level, which would be the earnings candle high spot or the earnings candle opening print. So that's going to be the general level that I'll be targeting if I decide to buy a little bit of time here and then I see a strong failure that traps a lot of people on this 1, 2, 3, 4, 5, 6 day resistance break base. It doesn't base, it fails, and then we find that ask get a little bit more aggressive at spots where a lower high would be put in from, and then it's going to likely take out all of this buy side move because there's really no strong liquid buyer within that overall spot on the chart, right? And then whenever you pull out some moving averages here, you can see how I'm not a big moving average guy, by the way. Sometimes I'll take a peek at them, but I'm not a big. And funny enough, this is also where that heavier volume shelf is also kind of aligning with is down here towards the earnings range low. That kind of sold off a little bit and then saw like ever so slightly higher lows from each and every individual low of day, and then it started to find that relief as soon as we started getting a lot of those tech buybacks. So this is also a big volume shelf up here. This is actually the volume point of control, local volume point of control. This is a lot different because this is just a shelf that has a ton of support established off of. So that's a little bit different and just a range-based area. This is just very pivotal, and this is sometimes why volume shelves tie in with bearish progression areas and areas on the chart where it's a larger perspective of what we're fighting for each and every side. So ideally what they want to do here, guys, is they want to take control of 192.50. And funny enough, that's where we're getting that seller from. So we'll see what happens with that seller leading into the new week. I'm not going to be super biased into shorting this, but that's just kind of what I'm seeing there with Apple. So I still have a little bit of puts over here on Google. I traded monthlies on these lower highs up here. I explained that in the last video in the diving deeper series, day 3 or 4. So guys, if we can catch a little bit more room with this chart, um, whether that be a retest over here and a failure off of like the 173 spot. Hopefully previous day high, meaning Friday's high, can start potentially looking like a failure off of that. But all I have is risk-free runners here, risk-free exposure. And like I said, talking about bearish, bullish, progressive spots, this is an area on the chart where it makes a lot of sense in terms of what is happening from a larger perspective, which would be, okay, we gapped up, we sold. That's could be preliminary distribution. So your first initial sign of a seller coming in. This 3 bar series, this 3 bar pattern here of a sell, that's a little bit premature of a campaign. Do you think a fresh bullish peg power earnings gap with a gap up like this into price discovery is just going to give up the entirety of the gain that fast with no consolidation and just crazy gap downs and continuations after those gaps? No, that's called an unbalanced chart. This is a 7% drawdown in 4 days. Now, what happened was we got the retest, we failed, we started to sell, and then we got bearish news for a lower high off of this progressive spot being failed, but that bearish news was reaccumulated the next day with a really strong tape. And then what did that lead us into, guys? Was just gap down news reaccumulated. Obviously, what that calls for with the previous kind of flag and looking for the higher low, this is obviously just them trying to manipulate price lower to mark this back up through where they couldn't get through from before. So this is all just an inventory collection down here. And then they start breaking and basing levels and they send it above the earnings candle high for a new high. Now, that's how distribution starts to work, is above this new high. If that same seller from this 3 bar series is going to play out over here, he's going to play out, and you're going to find a failure, lower high, maybe a sell candle with a strong spread followed by inside bars that have no notable buyer within them. And then you get your sell and your recorrection back into like equilibrium. If you want to take the low to the high, that's actually insane where that bottom is. That's right off your golden pocket. So that's kind of where I started to scale anyways. I had my target in mind over there. Um, I got like 40% on monthly, so that wasn't a bad trade, but wasn't anything crazy. So that's kind of how my focus is there over there with tech. We do have a lot more to talk about in terms of like just the general market. First of all, I like to talk about weekly charts. This is a really nice weekly chart just because of I like how it's building up this really strong climax where you're getting higher lows and then a diminishing range into a flat top resistance, and then you start getting the expansion on a really healthy looking bullish candle. And now what we're doing is we're getting that retest with 2 lower lows and a little flag channel here that are being bought potentially to send us back into, potential expansion or wherever we could really move to. I have a couple targets in mind. Those targets likely just being something like over here, and then also my smaller time frame target for Velo, which is an oil stock, is going to be 159. So if we could catch a move into this candle off of some sort of higher low on the hourly tomorrow, I'd be more than happy to trade this. So maybe like a red to green day on in the oil sector, or just an overnight off of like a sell and then a base all day. Whatever it is, what I'm looking for is like the 154 area. If we could get that, if we can't get that, I would be willing to potentially trade this a little bit more aggressively, but I would probably end up going with a smaller time frame trade and a tighter stop and look more for like a 5 minute execution, if that makes sense. Alrighty, next one. So Nike has been a focus of mine for a nice while here because of just the overall compression. I also explained this chart in the last video. So I really like this one for a few reasons. Those reasons just being, like I said, the compression always leads to the expansion. I'm already up 100 and something percent on the bi-weeklies, and I still have like nearly half of that position, but I'd be willing to look to roll profit if we were to get a sell. That sell likely, see, this is where the chart gets a little bit tricky, but something that would build out like a retest of the Thursday high, or like a retest of this internal resistance, and then an aggressive pop, move, and go back into the gap. So technically what I would be looking for is like that high or above that high. So that would bring on a retest into a target to target trading. That would be another $2 on the underlying, which would be fantastic. I don't know if we're going to get that, but I am going to keep my focus over there. DraftKings, been short this one for a very long time. I caught on one runner, it was like 1200%. So um, I made a nice little extra bit on that one. But I'm out of all my positions from a larger and shorter time frame, from a larger and shorter expiry. And what I was always looking for was the target into this gap. Now, this is a growth name, and we did get a strong sell-off on some of the highest volume outside of an earnings report ever since potentially ever. Yeah, I'm pretty sure that might have been the highest volume ever outside of an earnings report. So that's very notable, guys. It's very notable in terms of what's going on and what where DraftKings could be headed for the future. And one thing that I did like about this chart was that we started to get really, really, really heavy volume into the close. And then that buyer reappeared on the previous day low, and volume is really soaking up and drying up. And like I said, there was some big time orders hitting the tape on DraftKings with this 3.475 million 5 minute candle into the close, and it just remained elevated in terms of um, volume throughout the day, other than like the low a day range that kind of dried out. So what I'd be looking for on DraftKings is just for the hourly to start showing something. If it wants to move its way lower, it can. But keep in mind, guys, this is also a retest of this earnings candle high, right? Which was technically a resistance that broke out, looked like a failure, and then we obviously got the move afterwards. So I'm just gonna let some time play out here with DraftKings and just see if we do end up finding a buyer off this previous bull gap that we just filled. Um, like I said, we'll see. I don't necessarily know. Another focus that I have in mind is ZOM because of this flag build out, this base. I would be loving a pullback on this. If we don't get the pullback, I would likely be looking for like a 117.50 base, which is technically a previous day high area. When you look at this from like, okay, the chart is bugged, never mind. Yeah, so there's not really any clean execution spot here. More or less what I would be looking for is some sort of minor pullback. And some sort of minor pullback when you get these trend days, typically what you would want to see is like you could take your low to your high, look for the equilibrium, look for previous levels that need to be tested. Maybe something like this at the 115 area, maybe 116 area, whatever it is, guys. There's a lot of focus for me on this chart from 115 to 116 levels being retested, and we'll see how this one plays out. This is also just holding this gap from all the way back here, and it's just a secondary lower low being bought in this little, or this, I should say, really big bull flag type of look on the daily chart. So, yeah, fills should really never be on like a gap up. So if we do get a gap up, I'm not going to be super interested. Phase Energy, you gotta like this one still. It may need a day or two. I'd be looking at mid-week for this one just because of how I don't love the daily candle sequences here. If I see a really, really, really strong solar tape off the open and a really, really strong move right off the open on some heavy volume with a really notable candle spread to the move that we see, or maybe some sort of crazy hammer candle somewhere off the open or in between the 30-minute opening range, then I'd be looking for obviously a trade there. But in terms of just looking for a retest in a digestion day, I would be looking at some sort of zone that looks like this. So if we could hold something that looks like that, that'd be fantastic. If we can't, I'm just going to keep it off the radar until it starts looking really clean. Another setup that I do kind of like here would be this one. Disney. So the only reason as to why I have my eyes on Disney, or it's not the worst setup in the world, is just because of this sell candle with a buyer that was kind of established here with a hammer candle off of this strong sell off the open. And then it never really pushed back into the upper ranges of this. It kind of just failed the midway point. If you take swing low, swing high, you look at your equilibrium, it just kept failing like the 10, kind of like just the 104 area, which was your equilibrium range. And then it brought another sell. That sell brought another buyer, and then a higher low, and then the expansion. Now, I don't love fills up here, but like if, yet again, if we could catch some sort of sell or maybe a 104 base, I'd be willing to take this, but it's not the best risk to reward. So what I would ultimately love would be some sort of like inside bar, something that looks like this, that retests like down into here, and then goes. That would be the only thing that I'm looking for. So we'll see if that one can give us anything, and if not, and if we get another sell, I'll be looking for this. So this is going to be a trade for me soon, is all I'm really saying. If it doesn't give off any sort of strong higher low and then the move, I would be looking for sell, 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 retest, and then sell with a buyer entering a little bit early on a lower low from this low a day break. So something that looks like boom, 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 and then obviously boom, 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 boom. Okay, so it's a very simple chart. It just takes a little bit of patience and to just wait for the best optimal entry possible. And if that isn't the case, that you can't catch that, um, then not a big deal. But yeah, so I'm gonna lay this one off for just for now. There is a couple other charts that I do like, but I gotta give them a little bit of time. Tesla doesn't look so bad. Um, I definitely will be watching Tesla, but it's going to take a little bit of time, and it's going to be a little bit more noticeable. What I'd be looking for a couple scenarios here would be a really nice move through here, and then like retests of these day highs or the 180 area. So kind of where my execution would be, where I would have the interest of this would be this little range of a move for the retest. Um, and then if not, what I would really like would be a sell-off tomorrow, boom, and then it starts wiping out all of these days of support, and then it finds a quick buyer off of them, and then it rips higher, and you're getting a quick test of some sort of larger, notable buyer coming in off of like a wipe of all of this liquidity built off this range down here. So if we get that, that'd be even nicer, but we have to wait and see. This is all kind of just a patience game for now, given the fact that we do have some semiconductors relatively weak. We do have NVIDIA that has been carrying the market, kind of giving off some sort of bull flag looking thing, but I don't know what's going to really happen over here. I don't think anybody really does because it's at such a crazy price, but I don't know. We'll see. I don't really need to know where this one's going to go. So that's that. AMD's range, not the cleanest yet until we start getting like a stronger, more clear weekly print off of this area, as well as the support over here. That's kind of, trying to be retested over here. And this is all like a very big progressive spot. So daily and weekly prints are going to be very pivotal for AMD, and I'm just more or less just waiting and seeing what side takes control of the name over there. We could hit a little scan in the sectors. This list has not been updated for a while, so please bear with me here. Um, but we do have some other clean charts potentially that we could trade. Uh, Discretionary, not anything that I've been absolutely loving. Um, Lowe's isn't the worst of the worst, but it's not something that's like ideal. So yeah, I'm probably just gonna keep the scan there pretty self-explanatory and very straightforward until we can find obviously find something that makes a lot of sense and where the conviction becomes extremely confident. MMM is also going to be on a focus for me. This is an industrial. Keep in mind, guys, this is just a wider perspective of how many days on end of a resistance did we just break here? This was a previous support. It turned into a resistance. And then how long of a resistance was this? This was from here to here. This was a 260-day resistance. And if you look at it from this little retest over here, it was a 30-day resistance. So we are getting a retest into that. The volume patterns ever since March have been relatively bullish, and we did just print a weekly hammer. It isn't quite a retest, but yet again, I don't really care whenever the volume kind of looks like that. So we will see, as well as a bullish peg here with some volume behind it. So um, yeah, we'll see. It failed at the 105, which is the first initial target whenever I was trading this the last time. I got some beautiful wins over here, and this one may be ready for now another one, but we'll see. Yeah, so this one's going to be on the focus. VLO. We have a couple other ones. Um, EA, INTC. So the chip sector has been one that I don't necessarily know too much about. And one thing that I will say about INTC is that if we were to catch another red day, that'd be absolutely amazing with some sort of break. Let me get rid of all of this stuff on my chart. Okay, yeah, so some sort of break here and a break failure of however many days of support was being created, and then a break higher low, and then the expansion back higher would be awesome if this were to start printing out like some sort of early week tape that was weaker. And if not, what I'd be looking for is probably this earnings candle low to be held. Um, so if you go in like the 15 area, it's going to be like this gap or like 30-50 area, just that general range. And I'll look for a trade there on shorter expiry. So that's about it for what I'm looking at in the market. Um, th I can update you guys with some things. Um, I can update you guys with some things probably like Tuesday or Wednesday. So we'll see. There's a lot of data this week too, so um, I'm going to be taking a little bit slow at the start, but I'm going to be just trading how I've been trading, where Mag 7 hasn't been the most clean thing in the world, but if you slam the table on a 2, 3 tickers in a week and you hit on them, um, and you're trading good risk to reward over there, then you're going to make your week off of, the simple chart that's making your job easier. So that's all I'm really trying to do again. So I already warned you guys about that. So um, yeah, I already warned you guys about this last week, how it was going to be done with like Nike, Enphase, DraftKings short was really nice. Weeks before that were like MMM, Tesla. We had a couple other ones, but yeah, just looking for like a couple really clean, solid trades with some solid size behind them. It's not the most fun thing in the world. It doesn't look super appealing, but it's the right way to go about things if you're picking the best setups. Trade less, make more.